Started here. It's just we'll go ahead and get started here. It's just a kind of a few minutes after noon, and we always like to start these timely and end right at 1 o'clock. But very delighted and fortunate here today to have Todd Sims, who is president of B. Riley Venture Capital, with us. And I think probably most of the people on the call recognize that his firm led a $17 million Series A investment in Coeur d'Alene-based continuous composites. I think that deal closed in July, and I'm particularly interested to learn more about this because B. Riley is a firm I've not been familiar with, and it's great to see new participants investing in companies in our region. Today, we're going to do something a little bit different. Instead of hearing from me, we're going to have Rick Repp moderate today's session and formally introduce Todd. Rick is a principal with Witherspoon Kelly. He's also an Ignite board member, and Rick's firm, Witherspoon Kelly, is the sponsor of Meet the Investors. So it's very appropriate to have Rick involved, and Rick represented Continuous Composites in this transaction. So with that, Rick, I'm just going to turn it over to you, have you formally introduce Todd, and carry us through this discussion today. So thank you, everyone, for attending. And Rick, the floor is yours.
All right. Thanks, Tom. Appreciate this opportunity. And thank you, Todd, for joining our group today and being willing to let me grill you with a few questions so you can share your insights. Todd is the president of B. Riley Venture Capital, and I'm going to let him describe a little bit about his background and the work that he does with B. Riley. B. Riley Venture Capital is a new fund that's supported and was started by B. Riley Financial, which is a significantly large publicly traded organization with over 200 offices and 2,000 employees. That's actively involved in investment banking, wealth management, and financial consulting. So to have Todd speaking to us from LA today is a privilege and an honor. And so Todd, I'd like to start off by asking you, can you describe, please, what your day-to-day responsibilities as president of B. Riley Venture Capital, what does that entail?
Yeah, well, thanks, Rick, and to the Ignite team and to everyone joining here. Happy to be a part of it. Yeah, so B. Riley Financial has been around for about 25 years. As Rick mentioned, pretty diversified financial services business. I would say its core has always been around kind of the capital markets segment. So investing, advising, and supporting mostly public companies, small, mid-cap public companies, whether it's in a capital raise or an M&A process or whatever services they need. The venture arm is fairly new for B. Riley. We had done it sort of haphazardly over the last 20-some years. I'm fairly new. I was on the B. Riley Financial board for about 5 years and stepped off the board just this last year to really launch this arm of investment focused on late-stage venture capital. So just to answer the question, I suppose in that regard, I do not consider B. Riley Venture Capital a very typical venture arm, and I can explain why that is and the differences between us and a traditional VC. But I suppose on a day-to-day basis, we do what most VCs do. We look at deals. We do diligence on those deals once we find those deals. And now we're almost a year old, and we have a portfolio, so we have to manage that portfolio. We typically do not. Continuous composites is a little bit of an outlier for us. It's a little bit earlier stage than our typical investment, and in that case, I sit on the board. So there's an additional responsibility with a few of our investments, like continuous composites, where the ongoing management is a little bit more taxing from a time perspective. But yeah, we look at a ton of deals. We do diligence once we find one we like, and then we try to manage that. I think the one thing I would say, we do have a component of our investment strategy that is heavily skewed towards syndicating that investment. So if we find a deal we like, we will make that investment, we'll backstop it, we'll fund it, and then we'll turn to our network of clients. And those clients range from large institutional investors to family offices to high net worth individuals, and we'll syndicate that investment. Again, continuous composites approach was slightly different, but the syndication effort is really important. And really that is about us bringing interesting proprietary deals to our network of clients. And that takes a lot of time. It's one thing to make a, $5, $6, $8 million investment, but to now then turn and syndicate half of that, 50% is typically our number on syndication. That's a heavy lift to do that. So I think the one thing I would say on my time, most VC firms are not active syndicators. They might try to pool other investors alongside, but they don't typically sell off some of their investments. So I think that's probably a unique differentiation among others for B. Riley Venture Capital.
Okay, great. Thank you. That's helpful to understand. How about stepping back a moment? If B. Riley is offering assistance to mid-cap as sort of an investment banking, I mean, I think many of us that are out here away from New York City or away from Silicon Valley, I mean, we think of Morgan Stanley, we think of Goldman Sachs as some of the big investment banks that do what B. Riley does. Who do you consider to be your competitors? Is it D.A. Davidson is sort of the same size focus, or what's the focus of your market? Who would you consider your peers to be at B. Riley Financial?
Yeah, that's a really good point. And I think we struggle from a investor relations standpoint of finding interesting and comparable companies in that segment. We do a lot of things that those bulge bracket firms do. We just do it a little bit on a different scale and a little and toward kind of small and mid-cap size public markets. So I would say we're most like some of those bulge bracket firms in terms of the services that we provide. But we are, I think, just focused on a different part of the market. I'll give you an example though. Like this again, 25 years, B. Riley is a guy named Bryant Riley who is an investor in heart and has always put his principal balance sheet to work alongside the deals that we support. So if we're raising money for an IPO or an ATM, typically, we invest principally. And that is a real difference in the marketplace. There are not a lot of, some of those bulge bracket firms, Goldman Sachs, you mentioned, have, specific investment vehicles inside that they participate in deals, but that's a fairly rare thing. And so, but that's just how B. Riley has always operated. So shifting from kind of the public markets to the venture side, that was a natural progression for us. We had always put our own balance sheet to work. And just to clarify again, another difference between kind of our approach and a classic VC firm. A VC firm would go raise a fund and they would have LPs in that fund. We don't do that. We just operate off of our balance sheet. And so, the balance sheet has grown a lot over the last 8 to 10 years. I had talked to Bryant for literally a decade about what B. Riley should and could be doing in venture, and the balance sheet just wasn't there. And today it is. And so I think that was part of the catalyst to jumping in and operating this investment arm. But I think the effort to invest from our balance sheet is a real differentiator for us in the market as a whole and in venture as well.
Okay. Well, and that leads to a sort of a follow-up question. I mean, you mentioned that you were on the board of directors of B. Riley Financial, and then the VC fund was started about a year ago. I mean, was that were you part of the impetus? Was it your idea to start the fund, or did they come and recruit you, or how did you land in that role? Well,
yeah, I mean, knowing Bryant for 20 plus years helps. But I think Bryant's got an amazing vision, and I think he saw where his firm was going, and he knew that venture would be a component to it. So I think that was part of the reason why he kind of got me on the board 5 years ago. I'm an operator. I help build and operate companies. Over the last, I would say 10 to 15 years, that operational mentality had shifted a little bit to more of a strategic investor on behalf of the corporation I was working for. So I had started to do M&A and investment practices inside sort of as a strategic investor. But the shift was really, I think, a factor of the balance sheet growing, the market dynamics growing. And we both just felt like, so I had entertained coming on board with B. Riley for literally 8 to 10 years to do this. And I just never felt like the time was right. And finally, it became the right time to do that. So I stepped down in October of last year and launched it. And I'm still sort of I have an analyst, and that's it. We've done 10 deals in about 11 months, and it's just me and an analyst. And again, to the point I was making earlier, I try to lean on and leverage the rest of the firm as much as I can, whether that's through banking or research or any part of the firm that has expertise that we want to lean on.
Okay. Well, you just mentioned that you were an operator. Can you give us a little bit of your background, like what type of companies you were running and operating before you got into VC?
Sure. I mean, I cut my teeth back in the mid 90s up in Seattle for a Paul Allen company that was focused largely on digital media. So that was a very kind of early entrant into kind of scaled web development. We launched ESPN on the web in 1995 and built that practice and built that business really up. And that was before Disney had bought ESPN and Cap Cities. So we struck a deal with ESPN to launch the #1 sports website in the mid 90s. And on the back of that, we launched NFL in partnership with those leagues, NFL, NBA.com, and NASCAR. And my job was to run those businesses, again, in partnership with the leagues. That business eventually got acquired by Disney now that they had acquired ESPN and wanted to bolster their kind of digital practice. So they bought Starwave from Paul Allen. And at that time I moved, that was in Seattle, and that time I moved down to Los Angeles to actually work for the guy who had been running Disney's internet businesses down here in LA. And he had started an incubator. So I came down to work for him here, and we were literally just spinning up a new internet business every couple of months. And that was great until it wasn't. And then we kind of had to focus on the ones that we had gotten out of the incubator that had success, and really do the hard work of shutting down the ones that were not going to make it through at that point, which was a pretty bad ad market in 1999 and 2000. So we sold one of those businesses called business.com, which was effectively a B2B search engine, but it was really in the ad business. It was sort of like Google AdWords for the B2B market. Sold that in 2007, I guess it was. And then the last 10 years, I was with a large entertainment company, live entertainment company here in Los Angeles, but a global company called AEG, Anschutz Entertainment Group. They own the LA Kings and the LA Galaxy, which is the soccer team down here. But more importantly, they own and operate music venues, music and sports venues around the world. They own Coachella, which is the festival down here in LA, but also festivals and other music assets across the globe.
Okay. So what was, going back to like when you graduated from college, you graduated with a finance degree, a marketing degree? What was your background that sort of led to this path?
I was a political science major. I wanted to be an ambassador. So I went to DC for a couple of years and traveled around in mostly the Middle East, pursuing that, and just sort of one thing led to another, and realized that was sort of not the path I wanted. And it was right when the internet was kind of coming to fruition. And the only thing I would say, I don't know exactly what the makeup of the audience is here, but the one thing I would say is, so I'm not a technical person, but I did literally learned HTML. And I thought at the time, this is kind of at the Paul Allen point where we were launching ESPN, that little bit of technical knowledge went a long way. I mean, most of us are operating now in a world where, something is software driven, and not all of us are engineers and have that capability. But what I found was that little bit of technical knowledge, I was able to parlay that, effectively serve as the bridge between really this emerging advertising community who knew nothing about software and technology, but they knew what they knew, and they knew budgets and brands and all that, with the technical engineers that needed to develop products to make the ad market work. And so this was literally, we formed my boss was the founding member of the Internet Advertising Bureau, which was really the governing body around, or the industry body around, trying to facilitate and drive the overall ad market. And so the only lesson I would impart there is a little bit of technical knowledge went a long way in furthering my career. And I just always have had, I have a liberal arts, degree, but I loved digging into technologies. I knew nothing about 3D technology prior to my diligence in continuous composites. I have a pharmaceutical company I just invested in. I've learned more about AFib than I ever thought I would need to know. So I just find it fascinating to understand the problem and then understand these companies' unique perspectives or solutions to finding a solution for that problem. So that it's just an interesting notion. But again, like in the pharmaceutical and in the 3D printing and in the EV charging space and all of these spaces, I have to surround myself with people way smarter than myself. And that typically comes from different pockets of B. Riley. And if I can't find them or they don't exist, then an investment from B. Riley is pretty unlikely.
Okay, so what about the investment thesis in terms of, you mentioned a pharmaceutical company, 3D printing, and there's what sort of ties the 10 investments that the B. Riley has made, what ties them together? What's the consistent theme?
Yeah, I think its ability to go public. And I would put continuous composites as a little bit earlier than our typical profile. But if B. Riley as a platform is really good, I think we're really good at helping companies access the public markets, then our investments ought to at least be knocking on that door. And so most of our investments, the kind of ideal profile for us is the last capital in before an IPO or a SPAC. And so, these are, $100 million rounds where we're putting in $5 million. And the valuation is anywhere north of, $700 million to $1.3 billion. So those are interesting. And again, this is not the profile of continuous composites, but those are interesting because they have great investors all around the table. They are obviously heading toward a major kind of listing event. Again, the vehicle, whether it's a SPAC or an IPO, it doesn't matter. But we have a meaningful seat at the table, meaning we have alignment from the investors and the management team that in the event of an IPO, hopefully soon, you talked about one of your questions was sort of your investment horizon. Typically for us, that investment horizon is, 2 to 3 years kind of tops. And we think that last capital in before an IPO is a really good place to be, particularly if everyone around the table understands why B. Riley is investing, which is really, again, to have a great return, to syndicate that investment and bring other clients along for that ride. But perhaps more importantly, to be the advisor for that company in whatever comes next. So we may not always be the lead book runner on an IPO, but we should get distribution, and play a meaningful role in an IPO process, for instance.
Okay. So tell us a little bit about how you even found Continuous Composites. I mean, how did they show up on your radar in the first place?
Yeah, so I mentioned, our effort, in BRVC's world, our effort to find partners across the B. Riley platform that helps us understand the issues, understands the investment, and then really can be a partner going forward. Well, this one came through an existing partnership. So in our banking area, so I think, Tyler's got something very unique in Continuous Composites. It's got a very different profile than your typical Series A kind of startup. And so some of those attributes kind of led them to find a banking partner kind of first. And so I don't want to speak too much for the Continuous Composite story, but I found them through a banking relationship that they had forged with, again, our investment bank part of our platform. And I think I'll just sort of paraphrase, but there was some inbound interest potentially on an acquisition. And so they needed to engage a banker and figure out strategically what direction they should go in. And, Tyler's a smart guy, but, surrounding yourself with other perspectives is really important, and finding trusted advisors is really important, particularly at a company at the stage that Continuous Composites is at, which is a real transition stage. So I think he found and liked the banking team at B. Riley, and for good reason. He found probably the best banker in the firm, who really understood the story and really liked the story, and his guidance. Again, Tyler can pipe in if I'm telling this story wrong, but the B. Riley banker's guidance was, look, you want to create optionality here. So the best way to do that is to raise a significant round of capital, be well capitalized so that you have the option of selling or going public or continuing to grow or whatever is right for the business. And so it was sort of determined that B. Riley would be the advisor in helping Continuous Composites raise that capital. And so then it came to me as, hey, we're going to go raise money for this business. What do you think? And I really liked the story. I liked the partnership with banking. I liked the unique aspects and attributes that the business had, even though it fell outside of our kind of core thesis in terms of stage. It was a little earlier, as I mentioned. But I thought it was interesting and decided to lead the round. And so the engagement from B. Riley was really twofold. It was one, an investment from BRVC, which we led the round. And then it was a broader capital raise from B. Riley Securities, which is the investment banking side. Now, obviously, the lines are blurred there, and we were all pitching in, trying to find the rest of the capital. And Continuous Composites had its own existing investors that wanted to participate, and they did, and we appreciate that. But the effort was technically kind of two different engagements from B. Riley.
Okay. You mentioned that you, as leading the round, you also went out and recruited others to co-invest with you and syndicated the round to some degree. How hard was it? Did you get any pushback when you're trying to convince these other investors to invest in Idaho? Was that, a company in Coeur d'Alene, Idaho is not, anywhere close to Silicon Valley. So what kind of unique aspects did that create in getting this transaction done?
I don't think, I think if you look at where B. Riley has invested over the 20-year history, it has not concentrated in kind of Silicon Valley or kind of even, we are, again, small mid-cap focused. I think someone was telling me a story. One of our first investments, this is 20 some years ago, was literally just a dirt moving company. So there is no fear on behalf of B. Riley to get on board with kind of very, kind of off the radar companies that might exist in kind of outside of the core investment zones. I don't think that's ever, And I think that most of our investors see that we find value wherever it might be. Personally, I don't know if this was known, but I grew up in Boise and worked in Seattle, so I kind of know a bit about the market. But with Idaho specifically, I was a little bit nervous about additional sources of capital or hiring and finding talent. And so I think those issues are still out there, and we're going to have to work around that and through those issues. So I think that any trepidation that I had as an investor, frankly, are still there. Like we're going to have to work through those issues as Tyler kind of scales and transforms this business into kind of what it's been to where it's going to go. So those issues are still there. But from our syndication and co-investors, if they didn't invest, it wasn't because it was in Idaho. It was because of stage or time to liquidity. That was typically the biggest issue. Again, we typically deal in public companies. Most of our clients understand that path. So this product being the BRVC offering writ large is just a little bit of a different beast. It's illiquid, it's private. I mean, so our clients sometimes, the closer our companies are to an IPO, the more comfortably they'll co-invest. That said, we raised more and syndicated more capital for this one than we had any other portfolio company. But it was a lot of work. It was definitely a heavy lift.
So you mentioned that B. Riley has not limited itself to one geography. Going back and looking at what B. Riley Venture Capital has done, those 10 investments, you mind telling us, where those 10 investments are, what geography those 10 investments are in?
Yeah, they're a couple in the Bay Area. One's in Virginia, so outside of DC. Gosh, I'm kind of blanking on this, but one's in Singapore. So the Singapore one is a $1 billion fintech company that is eyeing again, sort of last capital in before an IPO, and they raised $200 million. We were a part of that, and but that's a Singapore-based company with global fintech operations, kind of an insurance technology company. So they're scattered. One's in Austin. The one I just closed is in Austin, Texas. It's an AI company. So I would say pretty diverse, not the pharmaceutical companies based in Chicago. So kind of all over the map. We definitely wouldn't invest in an international business unless it had very specific eyes on the U.S. public markets, right? That would be the criteria for us.
So if you're typically investing just before an IPO, can you talk a little bit about sort of the investment structure? I mean, is this the one and only Series A out of those 10 investments? Are you usually investing in like a Series E or C or some further along? And how does that change sort of your calculations and structuring the deal?
Well, definitely puts the onus. I mean, I guess the big difference there, the pivot there, is between whether we are leading or whether we are following. And if we're leading, and we've led, I think, 3 of those deals and have followed on the rest. And so leading is it definitely raises the bar. You have to, you are now the kind of gatekeeper in terms of this entire investment. And so, the amount of diligence that's required goes up, the amount of certainty that you have on kind of the investment thesis itself goes up. And so when you're following, you just get a draft on other people's work a bit. And again, we are a 2-person, firm, basically. between myself and an analyst who just started like 3 months ago. So it's just impossible to think that we are going to do the amount of diligence that is at the par of like a Tiger Global or someone like that. So we like to invest with great alongside when we're following. We like to invest in deals where literally the door is about to close. You know, they're raising 100 million and there's 90 of it already spoken for and in some cases wired. And we just get all this kind of diligence material from the lead investor who's done all the work, and that we can just evaluate very quickly, you know, do we like this deal? Do we think it's going to go public? How do the other people around the table look at us? Are they going to look at us as a partner relative to our investment size? Is there anyone else in the cap table that looks like us? If so, that kind of raises a red flag. I will tell you though, we invested alongside Goldman Sachs. So talk about a firm that has all the capabilities that we would ever hope to have. They led the round. It was a $60 million round. They led the round with 40. And we were just hoping to get a piece at $5 million investment. And I knew that they had veto rights, right? They're the new investor. They are not going to allow anyone in that cap table, the new cap table, new set of investors that they didn't want in there. And I figured they would say no. I figured they would say, look, this is all future banking will go through us. But they said yes. And I eventually talked to the lead investor, the partner at Goldman Sachs Growth on that. And he said point blank, he said, look, I think B. Riley has, you know, a differentiated position in the marketplace. And then when we IPO this thing, we might need help. You know, Goldman Sachs has one set of clients and B. Riley has another set of clients. And this could be very helpful to us as we go to market. So I think particularly in IPOs and to a certain extent in SPACs and the PIPE market, you know, people want certainty and they're willing to share the economics to achieve that certainty. So if they can improve their odds on a successful IPO by sort of partnering with a bank or two, they'll do that. And so I think Goldman's approach on that particular investment is kind of interesting and insightful to kind of how they viewed us marketplace. But to answer your question, like the door is closing, all certainty for the round is removed. All we have to do is move quickly and we can be a part of this round. You know, we're okay with the valuation. We like the management, the approach, all of that checks kind of all of our boxes. We can move very, very quickly. When we're leading the round, it is a more painful exercise.
So in the transactions where you led the round, like in the case of Continuous Composites, you took a board seat. And now is that typical of the other investments that you led the round, or is that something that you foresee being important in future investments? Because that's part of your expectation in having a role, you know, post investment. And why don't you talk about that decision to take a board seat?
Yeah, I think when we're kind of the largest institutional investor, I think it's on us to manage that through more hands-on approach, which typically requires a board seat. So yeah, the other ones where we've led, I've taken a board seat. There's going to be a moment here in the not so distant future that just bandwidth is just an issue. And so I think I'll have to think through, how many of those investments of that type that can be made, frankly. But for now, we're in good shape. I think most of the deals that I have, for instance, coming down the pike are not big, heavy lifts. I have one that probably, if we do, will require us to find a board seat. But also, I will say this. I mean, I don't have to be the board seat. Like, I'm trying to just provide value to the companies that we invest in. And if that comes with a board seat and it turns out that someone else is better suited to provide the value that would be helpful for the company, I'm fine for that as well. So, we're just trying to, be as helpful as we can. What we can't do that most VCs firms do, they help with hiring. They help with other companies in their portfolio. Like that's not our value add. Our value add is kind of more on the financial and more on kind of what is to come on the banking side. So we also need to be, we're not industry experts. We're not. So I think at the right time, for instance, on continuous composites, if this company evolves into a place where I'm providing less value as one of the board members, then I'll find a replacement because the company and Tyler deserves to have an awesome board. And if I find that given the time constraints or other things going on that I am not providing that value, then we'll want to upgrade that.
Well, I do know based upon my conversations with the company that they were very pleased that you were willing to take a board seat and provide your experience and expertise. You were a feather in their cap, let us say. So I know they're very pleased to have you. Going back, well, first of all, let me just say, anyone else that's on here listening, please, if you have some questions, I'm getting close to the end of my questions that I had in mind. So please type out your questions in the chat box or just indicate in the chat box that you do have a question, and then we'll call on you and let you ask your question. But then while you're thinking about your questions, let me touch on something else you mentioned, and that is that most of your exits, you're expecting to see an IPO, you're expecting to see a SPAC. That's the market's changed. That's relatively something. I mean, within the past 2 or 3 years, SPACs started happening, IPOs started happening again. There was kind of a dearth of IPOs for about a decade, where M&A was the expected exit. So do you mind talking a little bit about what you see happening in the market with IPOs and SPACs and sort of the balance between M&A, and do you foresee any of your exits being M&A driven because that's the exit, or are you only investing in companies that you really see the IPO as the big reward?
Yes, I think we will have a nice mix between M&A, traditional IPO, and SPAC. I guess where you really want to lean in, where the most value we can provide is on the IPO and the SPAC side. So I think we are again, Tyler's probably got the best banker in our business, but we're not as strong in some segments as we are in others on the banking side. So I feel like it's got to have a story where we can feel like this is an IPO candidate or a public company candidate to really satisfy our investment thesis. Once we get in, any exit is a good exit, I would say. But we would definitely like those that where we have a chance to really provide a lot of value. When we're the lead, like in this case, we're already engaged on the banking side. But an investment where we're putting in $5 million as part of a $200 million round, if that Singapore fintech company goes public, I do not know if we will be the M&A banker on that. I just have, being perfectly honest, I believe they will probably go to someone like Morgan Stanley or a Goldman Sachs to handle that transaction, despite the fact that we're in the cap table and they're not. So I think just realistically, I think that's not where some of our strength lies. Okay. But I think again, Tyler's well positioned with the banker that we have on continuous composites.
Great. Okay, thank you. All right, we're getting a couple questions in from the audience. Graham Moorhead, you have a question? I think Cindy's running the mute button, not me. So
okay, I just unmuted myself. Can you hear me?
Yep. Yes.
All right. So I have just 3 questions here. I'm just going to throw them out and you can answer them at will. When you invest a fund, is it kind of continuous, like just ongoing, or do you specify this is a discrete fund? We are now investing this fund. And if you do, how do you pay yourself? Is it 2 and 20? What you have yourself and an analyst. Who else helps your specific firm, B. Riley V Capital, decide whether to go ahead on an investment or not? Is it really just you and the analyst? And basically just talk about that.
Sure. So just to clarify, this is all balance sheet. So we I'm competing when I go to Bryant. I'll just, because he's a human being, he's an actual person, Bryant Riley. When I go to him and I say, hey, I have this great deal, I want to invest $5 million in this deal, I know I am competing with every other part of the firm that may also be looking for capital to invest principally. It's all coming from the same pool. So, I need to watch out and bring as high quality deal as I can, because I know that it's part of that pool. So I do not have a discrete fund. He might say tomorrow, hey, let's hit the pause button. He did question me a few times in the first 6 months. He said, wow, we're coming out of the gate a little hot. I said, you want me to pump the brakes on this? And he's like, no. I mean, he's an investor. So I think he sees his job as positioning the firm well enough so that we always have capital to invest principally on the deals that we really love. And so it's his job to make sure that through bonds or through debt or through whatever mechanism he can to generate the balance sheet capital required to make these smart investments. So that's sort of on that side. In terms of pay, I get paid on the return. And so, the 2 and 20, like I'm just an employee of B. Riley. And so I get paid a salary. And if we hit a home run with one of these things, I'll get a piece of this. To be honest, I don't even know what that piece is. This is a firm that probably operates a little bit differently than your typical firm. I've known Bryant for 20 plus years. So it's probably a very different setup than your typical VC firm with very clear kind of payouts and all that. In terms of our syndication, when we raise money to syndicate in our investments, we charge a 7% upfront fee with no management fee and no carry interest on that. So that's basically leaning in with how the rest of the firm operates. If we raise, $100 million for an IPO, we don't charge a carry on that. We don't charge, we charge an upfront fee, and then we collect that and we move on. We pay our salespeople out and then we move on. So we kind of wanted to lean in on that same structure. I've found for the investors that we're bringing in to co-invest with us in our deals, that those economics are very friendly, right? A 7% upfront fee on the investment capital with no carried interest is a good deal in their eyes. In terms of who decides, I mean, ultimately it's Bryant. I mean, I do have an investment committee. We do have a chief investment officer for the firm. We have weekly updates where I keep them, appraised of kind of, what deals we have in the pipeline, what deals I'm bringing to committee. Someone once said, I was sort of making a big deal like, we don't have a fund, so it's just balance sheet capital. And they said, you know what? One day you might want to raise a fund. So diligence this as you go, as if it is a fund, so that you can go with all the detail, with all the background, and say, okay, now we do want to raise a fund. This is how we spent, the $100 million of capital that we deployed for B. Riley, and now we're raising a $100 million fund. So we might eventually want to raise a fund. So we've really been trying to go through the process that we would go through as if it were a fund, and as if we had these LPs to report to and be accountable to. So we've really tried to institute that sort of rigor in our process. But ultimately, the committee kind of takes a look at it and feels like it checks the boxes that we're trying to do. And I try to bring in the research person that might have taken a look at it, or the banker that has a perspective, and then we all kind of make a decision. But we move very, very quickly. I think that we are, again, because we don't have LPs, and we're able to kind of operate more nimbly in that regard. So that's been helpful to us in moving quickly when those kind of investment doors are about to close.
Thank you.
Okay. We got Tom Simpson. He has a question. Tom, you want to ask your question?
Sure. I mean, first of all, I must admit, I was not familiar with B. Riley until I heard of the announcement with Continuous Composites. But I'm really very fascinated because, there's a number of very interesting emerging companies in our region. And there aren't a lot of full service investment banking firms, that cater to small and mid-cap companies, which are the profile of the ones that come out of our region. So I'm kind of interested in learning more about, how many bankers do you have? How many research analysts do you have? Are they industry focused? Are they generalist? And then, what's kind of the best way for, other companies like Continuous Composites in our region to get connected with the bankers in your firm?
Yeah, so I don't know if I have the numbers off the top of my head, but yes, they are. The research team is, look, I think we are very, very well regarded as a kind of mid-cap investment bank. We have been the sole book runner on more small and mid-cap IPOs than any. So we are an emerging leader in that kind of smaller cap segment. Mm-hmm. And that's a 20-year overnight success type of story there. But I think the best way is through referral. So that could either come through me or come through Rick or come through Tyler in terms of those companies trying to find that full service kind of shop. And whether there's an investment that is a part of that or just a pure banking segment, our research is definitely, we have some generalists there, and we have some very targeted specific areas of focus as well. So I don't know if I could sort of rattle off the kind of facts and figures off the top of my head in terms of the research side, but happy to get you more information about that. And again, the referrals are the best way. So, use me or Rick or Tyler to make those connections.
Okay, perfect. Because I think there may be other companies here in Spokane, Coeur d'Alene, and Sandpoint that may be a good fit for you. So
got it. Okay, great. Thank you.
Well, and I'm not sure everyone on this call has met Tyler Alvarado, who is the CEO of Continuous Composites. He is on the call. Tyler, would you want to chime in and share your 2 cents of the experience of being on the receiving end of due diligence and capital investment and negotiating a transaction with B. Riley?
Absolutely, I'd be happy to. Thank you for all that great insight, Todd. It's been great to kind of hear more in depth about your background. But yeah, from Continuous Composites perspective, for those of you that don't know, we're located over in Coeur d'Alene, Idaho. We founded the company in 2015. And we really are the industry leader when it comes to continuous fiber 3D printing. Our roots have been very fundamental in both technology differentiation and intellectual property. So we've been taking a very purposeful approach over the last 5-6 years in how we've built out the company, remaining in stealth mode for about 3 years while we really protected this novel invention that we are confident that will disrupt manufacturing through the use of composites. So our IP portfolio is very robust, and we've been strategic in trying to keep as much of the equity as local as possible. Prior to this Series A, we kind of stayed out of that traditional venture capital realm and really kept our equity with friends, family, and kind of local angel investors that saw the opportunity. Believed in the team that was executing with it. And as Todd mentioned, we really were at an interesting inflection point earlier this year where we were being pursued by a lot of companies, both customers and strategic partners, to acquire our team, our technology, our IP. and really wanting to kind of run a dual path process and explore, what our opportunities could be, whether we want to sell now or whether we want to raise the capital and really transition from, a product technology company to a fully commercialized product and build out our organizational structure through kind of that growth and maturity of a business. And so we were wanting to engage with a partner investment bank that could kind of help us navigate these waters and these conversations. So we ran what I would call a short beauty pageant with different investment banks. And, we actually were introduced to B. Riley Financial Services through one of our strategic advisors. I quickly took a liking to Ryan Bernath, who's the investment banker that Todd was alluding to. And then meeting Todd on the BRVC side, it really was a good fit. I liked how not only were they willing to offer kind of the financial services side on navigating some corporate M&A and potentially taking us public and raising capital, but also willing to, develop their own thesis and conviction on continuous composites, on our tech, on our IP, on the team, and willing to put their own balance sheet capital to work. That really was a pretty big differentiator from the other investment banks that we had been talking to that also were wanting to help us through this transition, but might not necessarily been the right fit for continuous composites. And as you heard from Todd here, he's very reasonable and pragmatic. He really wants to invest and then do what's best for the company. And so, throughout the process, many times we would talk about, that board seat and, if a more value added natural, person evolved through the process, that we would place that person on the board. And as Rick mentioned, I'm me and the rest of the board, I speak for all of us, that we do feel very blessed and honored to have Todd not only lead this round, but sit on our board. He brings a very unique experience from, kind of the financial services side, but also being an operator and knowing what it's like to sit in this seat and kind of execute on a daily basis and knock down challenges. I felt like our negotiation of terms with BRVC was very smooth, and everyone was respectful, listened to each other's perspectives, and we ultimately had, once we had our agreed term sheet, it was probably a 45-day process from agreeing to the term sheet to having the money raised and capital in the bank. So we're excited now to be fully funded and kind of continuing to navigate those discussions, as well as executing on our growth plan and bringing our technology to market. So it's this team on our side as we kind of do this here in Coeur d'Alene.
Great.
Hey, Tyler, Tom Simpson here. I think your round is probably, if not the largest, one of the largest financings in the region in 2021. If you can say, how are you going to allocate the proceeds from this capital raise?
Yeah, absolutely. So the funds were really targeted towards bringing our initial product to market, as well as developing a new product that is kind of targeted towards a different customer base, a different price point, a lower barrier to entry. And a lot of our challenge prior to this funding round has been just an overwhelming demand on our technology and just resource constrained. And now that we've checked the box on being, no longer being financially resource constrained, we're really focused on expanding our human capital so that we can execute and respond to this overwhelming demand kind of in parallel versus having to do things in series. So we're working on building out our kind of executive leadership team to be executing this on a daily basis alongside me, as well as, the support organization that may not have existed because we didn't have a product in the market yet. So sales, marketing, customer service, all that kind of side of the business. So really be probably doubling our workforce over the next 12 to 18 months, I would say, launching our product into the market. And then we also made a strategic move. I think it's public knowledge that we are actually have a IP infringement lawsuit going against one of our competitors who has been building a company off of our core fundamental innovation. They have had done about 270 million of revenue since they started in 2015, and they earlier this summer went public via SPAC at about a $2.4 billion valuation. And so we're being represented by Lee and Hayes as our outside IP counsel, as well as a firm based out of Chicago, Oric, both tier 1 law firms. And so that's also an exciting strategic play that that we have launched. And we're kind of navigating a lot of different dynamics of the business, and it's an exciting time.
Okay, great, thank you.
Yep.
Well, we're down to about 2 minutes left. If we could maybe just have a quick 1 minute reading of the tea leaves, Todd. Where do you see the market as a whole going on a macroeconomic level? Is B. Riley and just seeing investment opportunities into the horizon? Are there any clouds in the sky that give you pause?
Well, I think our approach to invest fairly late stage is a good one. I think that valuation is definitely a concern. People are, the comps are crazy everywhere. So I think we have to be very careful. We are dealing with a slightly different calculus than a straight up VC firm, which only has their investment return as what drives that. We could create meaningful fees, for instance, which would change the dynamic. So I guess I'm seeing continued, great late stage opportunities. I'm seeing the pipe market on the SPAC side almost go from just absolutely crazy flowing to almost a trickle. So I think that I would expect to see a lot of SPAC carnage. We have one of our deals going through a SPAC now. I think it's better to be a target of a SPAC than a SPAC itself, right? It's sort of a numbers game. There are just too many SPACs out there. I think probably there were too many SPACs without real revenue going public. So there was kind of this little bit of a bubble that existed. I think right now we see kind of this flight to quality. So if you have a quality target in the marketplace, it will go public, whether that's through a SPAC or whether it's through an IPO, a traditional IPO. So I think just everyone is sort of slowing down on the earlier stage. The advantage of a SPAC is you can really talk about forward revenues in a way that you can't in a traditional IPO. And I think that will, I think earlier stage companies will have a harder time going public in any vehicle. So to your point earlier, maybe M&A comes back in vogue there. But look, we obviously have to. We're a product of the markets, and we have to be in tune with those. But I like our portfolio companies. They all sort of weathered the COVID storm a bit and are now in real growth mode. So we like that. If the IPO market closes and we have to wait a little bit more, that's fine too. Our banking services will be ready to help them at that stage. Great.
Well, you've answered a lot of technical questions today with some great insights. So thank you for your time and for your insights. I think Tom probably wants to wrap up the conversation for us all, but I just want to personally say thank you for accepting the invitation.
Thanks, Rick.
Yeah, well, really, my wrap up really is thank you very much, Todd. It's been very informative for me to learn more about your firm. I will definitely be reaching out to you for introductions to your investment banking side of the house. And thank you, Rick, for moderating it. It's very refreshing to see someone else on the spotlight and asking the questions. So thank you for doing that. And thanks to Witherspoon Kelly for sponsoring this. Our next Meet the Investor, Cindy, is when? I don't have the date off the top of my head, but it is
October 20th.
What date is that?
October 20th.
Yeah, on October 20th is the next Meet the Investor, and we have Greg Gottesman, who is co-founder of Pioneer Square Labs, really a fascinating early stage incubator of its own companies and its own captive financial resources presenting. Greg is also co-founder of rover.com, the pet sitting service, which has an office in Seattle. And so that should be a very interesting program on October 20th. So with that, thanks for everyone else that participated today. And again, Todd, looking forward to hopefully working more closely with your firm on other financings here in the region.
Great. Thanks, everyone. Thanks, Tom. Appreciate it. Thanks, Rick.
And lastly, thank you for Tyler, because if it weren't for Tyler, none of us would be here today to talk about B. Riley and Continuous Composites is clearly one of the most exciting companies in the region. So we're very hopeful for continued success for you and your company, Tyler.
Thank you. Appreciate it, Tom.
Thanks, everyone.
Okay. Good afternoon, everyone.
Bye-bye.
Take care, guys.